Hello and welcome to our weekly look ahead at the markets. And over the last few days, a big story that has driven a lot of the market sentiment has been inflation, of course. The US CPI numbers coming in lower than expected. That drove up a very strong day for the market. Equities rallied handsomely on that one. Really signaled to the bond market that the Fed is probably done with rate hikes. This was followed up with a decline in the producer price inflation data. Again, that's a more leading indicator for consumer inflation. That was down. And then UK inflation also fell more than expected. So again, we saw gilt yields fall and markets pulling in their bets, so raising expectations that the Bank of England will be cutting next year, and you saw that repricing in the Fed funds futures market as well, pulling in expectations closer to the start of the year. Now fully priced for a rate cut by the Fed in May, but perhaps a 1 in 3 chance by March. ECB also seeing the same sort of moves, and now 100 basis points of cuts priced in by the market by the end of the year. The question is whether or not this is going to happen. Doug McMillon, the CEO of Walmart, talked about deflation in the US, and the cost of a Thanksgiving meal is now less this year. It's going to be less this year than it was last year. And so that is a factor that people are looking at in terms of equity markets and bond markets in particular, assessing whether or not the Fed has maybe overdone it. Maybe central banks have tightened too much. Maybe we've still got a lot more to come in terms of cracks in the labour market opening up and disinflation coming as well. So coming up this week, we have not so much on that sort of macro Fed central bank kind of front, a more mixed bag for you. We've got PMIs. They'll be interesting towards the end of the week. They've been pretty soft in Europe, middling in the US, and we'll see whether or not there's any signs of further pressure coming from the amount of monetary tightening that we've seen over the last year and a bit. That will be looked at by the central banks, because we have started to see maybe the odd signs of cracks in the economy, that sort of very sharp decline in inflation, and starting to see jobless claims in the US also picking up again. They were the highest in August last week, continuing claims the highest in a couple of years. So companies not hiring. They're maybe not firing all that easily. They don't necessarily feel that they can easily replace people. They're not necessarily firing that much, but they are not hiring, and that is something that we're looking at as well. Ahead of that, you've got the autumn statement in the UK. Whether or not there's anything particularly market moving in that, we're not sure. I think Jeremy Hunt is keeping a pretty steady hand on the tiller as far as the bond market goes. We don't think there's going to be any kind of pre-election splurge. That might come in the spring though, so look out for that. Looking for things maybe on housing, maybe on inheritance tax, and those are the sorts of things that we'll be looking out for. And then ahead of all that is the earnings report, latest earnings from Nvidia. That's the big stock that's driven a lot of the euphoria this year in the US tech sector, and so investors will be looking to see what sort of outlook they're offering into 2025, and that will be of key importance for that big sort of headline banner tech sector, as I said, in the NASDAQ 100 and so on. So keep your eyes open for those Nvidia earnings. There's also some earnings from Zoom. That's the pandemic darling, which is somewhat fallen out of love. So there's a few earnings out there still, the tail end of Wall Street earnings season, but otherwise that's it for the next week. Thanks for watching.